All right, no problem. Thank you. Thank you. Hello, everyone. Good morning to you from this part of the world, and depending on whichever time zone you're tuning in from, good afternoon and good evening to you. I welcome you all to yet another promising edition of our Forex Morning Mastery. In fact, our first edition for the week as we navigate through the second week of the month of October. And of course, we have quite some interesting development in the financial landscape, which we are going to be deliberating on today. And in fact, I will be taking another route into the normal routine we usually take. So this time around, due to the recent development, I would like us to go through the US dollar index first of all before we dive into our normal routine. But before we go into the detail, let me introduce myself. My name is Sharif Daramola, and I will be your host for the next 30 to 40 minutes thereabout, where we shall be delving into the financial landscape, looking at the financial market from both technical and fundamental perspective with the utmost intent of identifying potential trading opportunity ahead of today's trading session. And as usual, we are going to be looking at three financial instruments, which includes the USOILSPOT, the GBPUSD, and of course my favorite asset amongst them, which is the XAUUSD, popularly known as the gold spot. Well, during the course of the weekend, I was only able to share one financial instrument, and that was the gold. I had a very tight schedule. I wasn't able to do the usual two that I normally do, but it's all fine and good. We are going to be delving into the USOILSPOT and the GBPUSD from the higher time frame. We're indeed going to be doing a top-down analysis, and in fact, it's a good opportunity for those of you who do not know or understand my analytical approach. Well, it's an opportunity for you to see how I do my analysis from the higher time frame. So I'm so excited to share them with you this morning. And for those of you who are joining in for the first time, you are highly welcome on board. I'm very excited to have you join me this morning as we take through the financial market. So we usually run the Forex Morning Mastery 3 times in a week. That is Mondays, Wednesdays, and Fridays, where we come here as a community to dissect the chart, look at how well these assets are doing, and of course use the historical data we have to manage our trading position and as well strategically position ourselves for the next move. And it's important for me to also emphasize that this is not a signal service platform, but an educational avenue where we all come together as a community to understand how the market is behaving with the utmost intent of strategically positioning ourselves for the next move. So you're highly welcome on board, and feel free to engage in the comment section. And don't forget to give the video a thumbs up. Your likes are very valuable to me. It's one way you are helping the community to grow, and at the same time it inspires me to continue to do more of this. I see a couple of comments in the comment section. I see you, Efat Shikda. How are you doing, Efat? I hope I pronounced that correctly. I guess this is your first time here. I'm not sure that is anyways, but you are very much welcome. And he's saying, how can I join the gold challenge? Well, the link is right in the description box below. Please just click on the link, and it will direct you through what you need to do to join it. Just click on the link and it will take you through the process. Hello, Okocha Kingdom. Good morning to you. Glad to have you around with us this morning as well. So with that being said, here we will be diving right into the business. And before we dive into the chart, let's quickly summarize what is driving the market right now. And last week we saw a strong US non-farm payroll report, reducing the chances of larger interest rate cuts by the Federal Reserve. Remember, we've been talking about the potential that the magnitude of the interest rate cut for the month of November, which everyone has been, the next one is just next week, I guess. So the next one, everyone were looking forward to a potential increase. Maybe the same 50 basis point cut we saw last month. And with the strong US non-farm payroll report that came in on Friday, coupled with the other labor-oriented data we saw a very good report from the US jobless claim count, the average hourly earnings, and in fact the unemployment rate in the United States dropped by 4.1%, which shows that the labor sector in the United States has been resilient. And if you remember what the Fed chairman said, he said that the magnitude of the interest rate cut will depend on how well or how the performance of the labor sector is. But with what we are seeing right now, it appears the labor sector is doing very, very well. Hence, the chances of a 25 basis point cut is what is looking possible on the table right now. And in fact, the sentiment in the market, 96% of the sentiment in the market based on the CME FedWatch tool as at this morning is leaning towards a 25 basis point cut. On top of that, the geopolitical risk in the Middle East are keeping the market on the edge right now, which is obviously going to be impacting the risk sentiment. Now, given this development, the US dollar has been standing tall right now as traders are pricing out any significant rate cut by the Federal Reserve, especially after that strong job report we saw last week. Now, this is very crucial because it sets the tone for everything or all of the assets we are monitoring on our watch list, from the golds to the GBPUSD and even the US crude oil market. So I want us to take a quick look at the US dollar index to see how all of these factors are playing out. Now, if we look at the while looking at the DXY this morning, so I just want to show us something here. So while looking at the DXY this morning, I saw quite an interesting technical outlook on the chart, which is looking very promising to help us understand how well the US dollar is doing. I don't know why my chart is loading, but while it loads up, the DXY is sitting at a critical zone right now, and this is what I want you all to pay attention to. It's a key indicator of the overall strength of the US dollar, which will likely influence how we approach the assets on our watch list today and for the remainder part of the week. Now, look at the structure here on the 1 hour time frame. Now, before we go into that 1 hour time frame, let me show you something on the higher time frame here. Now, if we scale up into the 4 hours time frame and taking into account the character of price action since the month of June of this year, you can see that the overall outlook in the market is very bearish. And as a result of this, after connecting the series of lower highs, look at what we have here. We have a beautiful descending trend line to work with. And not until last week, Friday, following the NFP data, that robust NFP report we got, which obviously pushed the price of the US dollar to the upside, we saw the first time price breaking out of that descending trend line to emphasize the strength of the buyers in the market at this point in time. Now, in addition to that trend line is my key level at the 102.300 area, a level which at some point in the month of August, I think somewhere at the beginning of the month of August, was serving as a buying niche before that level was broken to the downside. Now, from the look of things right now, price appeared to have broken out of the $102.300 area, and since it broke out of this level on Friday, price had maintained a consolidation above that particular area. And if you look at this closely, this is the first time price action will have got into this area in the last 2 months. I think a month or 2 months thereabout. This is the first time price will have gotten to this particular area. Now, for us going into the new week here, we are at a crucial juncture here where, depending on how the US dollar behaves around the structure, will determine if we will be continuing the uptrend. That is, buyers will continue to emphasize their strength, giving us a situation that could take price further to the upside, or we could see a theoretical expectation where it is expected that when price breaks out of a key structure like this, we could see price transition into a reversal setup that could incite a retracement back into structure, which could be as a result of profit-taking activity back into that structure, maybe in an attempt to continue the uptrend or even drop below the level to incite a sell-off to the downside. So you can see we are at a crucial juncture at this particular point in time. Now, if we take it a step further into the 1 hour time frame, we begin to see things more clearly. And right here on the 1 hour time frame, this is the consolidation phase we're seeing here on the higher time frame. Now, with what we have here, we are looking at a potential uptrend continuation pattern in the form of a bullish rectangle, where obviously a breakout of the resistance line of this reversal of this uptrend continuation pattern will further confirm that buyers are going to continue the momentum to the upside. But if the support line gets broken to the downside and retest of structure, we are likely going to see price drop significantly into the structure that was broken out that we did identify on the higher time frame. So I needed to show us this US dollar index so that we can have an overall outlook into how the US dollar has been behaving. And since all of the assets we are monitoring involves the US dollar in one way or the other, like the gold commodity, obviously, which is inversely proportional to the value of the US dollar, and of course the crude oil and the GBPUSD. Now, I will be walking you through the setups on all of this asset, taking into account the character of price action on the US dollar. But first, let's go right into the business. And before we do that, if you have any questions whatsoever, always feel free to oh my goodness, oh I'm sorry, sorry, I never knew there was no screen at all. Okay, I'm sorry about that. Can you see the screen right now? So that means I'll have to start all over again. Oh my goodness. Okay, so Odueno, thank you very much for that feedback there. I wonder why. Okay, I saw some comments here. I never saw that. Jonah Aruna, good morning to you. Woko Chai Kingdom, thank you for that feedback. I really appreciate that. So let's go right back into the details again. So let's look at what I was trying to explain here. Now, the first thing I shared was the 4 hours time frame, where I did took into account the character of price action for the last 3 to 4 months. That's since the month of June of this year, where I did identify the fact that price action has been finding series of lower lows and lower highs, giving us an idea into how weak the US dollar was in the last 3 months. And technically we do have a series of lower highs, and after capturing that, we had a descending trend line happen here, which obviously has been supporting the bearish momentum. However, last week, following the US non-farm payroll report, that's a very good report from the US NFP, we finally saw price break out of that descending trend line for the first time, bringing price action to a 2-month high at around the 102.650 level. And like I was saying earlier, I said we are at a critical juncture, as you will see, after price tested that 2-month high at the 102.700. We noticed that price had been going through a consolidation, and this continued into the Asian session this morning. Now, with the way things are going right now, we do not know if the momentum will continue to the upside. But if we look at the fundamentals behind the scenes, and considering the resilient US economy, which is evident from the GDP data that came in 2 weeks ago, showing that the US economy expanded by 3%. We also had the labor-oriented data in form of the US jobless claim count, which did very well. The NFP did tremendously well. And of course, the unemployment rate showed that unemployment had reduced by 4.1% in the United States. And considering the fact that the labor sector is one of the sectors the Feds are looking at to decide the magnitude of interest rate cuts, the path of least resistance for the US dollar at this moment is looking very positive. However, if we are looking at things from a technical standpoint, we want to see how the market is going to be reacting to the structure. Is it going to give us an uptrend continuation pattern that will evolve into price breaking and finding new highs? Or are we going to be seeing a reversal setup that will see price action retrace back into the structure in an attempt to continue the uptrend move? So this is what we are trying to look at here. And when we scale down into the 1 hour time frame, we begin to see things much more clearly. Now, if you look at the structure here on the 1 hour time frame, you will see that we're beginning to notice that price action is evolving into an uptrend continuation pattern after taking into account the impulsive move that brought us to this point. And from the look of things, I'm seeing something like a bullish rectangle, as you will see here. As you will see, price has been confined within the 102.625 and the 102.415 since Friday's trading session. And to validate this uptrend continuation pattern, we will need price to break out of the 102.625 to continue the uptrend move. However, if price does not break out of the structure and instead we see price break down the support line, this could incite selling pressure, which could be as a reflection of profit-taking activity, as those who had capitalized on that strong bullish momentum in the last 3 to 4 days may likely want to be taking some profits off the chart. So with this structure identified here on the DXY, and taking into account the fundamental factors, I still strongly believe that the US dollar has a chance of continuing the uptrend scenario. So what we are going to be doing today is I will be walking you through the setups on the asset we will be monitoring today, since all of these assets involves the US dollar in one way or the other. The USOILSPOT is largely influenced by the US dollar, the GBPUSD, and of course the XAUUSD. Now, with that said here, we will be moving right into our normal routine by checking on the economic calendar. But before we do that, if you do have any questions as regards to what I've talked about so far, feel free to drop them in the comment section. Trust me, I'm here and willing to be of help in that regard. So with that said here, let's move right into the economic calendar. Of course, we all know by checking on the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart. Now, based on the assets we are monitoring for this week, which includes the USOILSPOT, the GBPUSD, and of course the XAUUSD, we are going to be focusing on high impactful events from both the United States and the United Kingdom economic docket. However, on days like today, Monday, October 7, when we do not have any high impactful event, we will incorporate mid-tier economic features so that we can have a broader view into what market participants will be looking at for fresh impetus. So today, Monday, October 7, in the absence of no high impactful event, we have a bunch of speeches coming in from federal officials today. And the importance of such speeches is that since most of these federal officials are voting members of the FOMC, their outlook into the US economy will obviously give us clues into what their decisions will be like when they start voting for either an interest rate cut, interest on change, or interest rate hike. So this will give us an idea, give the market an idea into this, and will tend to guide how they will be strategically positioning themselves for the next move. So later today, and about 7 to 8 hours from now, we are going to be looking at some speeches from Bowman, Kashkari, Bostic, and much more later in the day. Mosalem will be having a speech too as well. So we will be looking forward to the speeches, and of course I will be giving us an update into the recent there's these speeches, the highlight during my commentary tomorrow morning. Then besides this, we are going to be looking forward to the BRC like-for-like retail sales data from the United Kingdom much more later in the evening. And for those of us who do not know, this data here gives us an insight into the performance of the retail sector in the United Kingdom. So we are going to be looking forward to this one. If the data comes in higher than market had expected, we will be looking at a potential positive traction in favor of the GBPUSD. And if this data comes in below market had expected, we may likely see the pound sterling continue to drop like it has been doing in the last couple of weeks. So with that said here, I would encourage us all to mark out this timing so that we are around to see how the market will anticipate this event. So today we are going to be diving right into the chart right now. Let's look out for structural patterns that will aid us in identifying potential trading opportunity ahead of today's trading session. So with that said, let's move right into the first assets on our watch list for today. So my US oil usually take a while before it loads up, so please don't mind the time it takes. Okay, so sorry, give me a moment please. Let me attend to my little boy here. I will be right back in a moment. All right, thank you. So the next asset we are looking at this morning is the USOILSPOT, and what a tremendous week we had. From the previous week, we were able to capitalize on some interesting trading setup. We had roller coasters of buys, sells, and buy again during the later part of the week, and it appears this momentum is continuing to the upside again. And in fact, I do have a buy position triggered around the $74-ish area, which I will be sharing with us in a moment. But before we go into the technical details, it's important that we also take note of the fundamental drivers. We want to look at both the positive and negative drivers that will be influencing the sentiment in the market today. Hold on a second. Sorry again, please don't mind me. I had to attend to my boy here. If not, it will continue to disturb, and it will not make me concentrate on what we are doing here. So bear with me on that one. So I'm right back in, and we are talking about looking at the positive and negative drivers that will be influencing the US oil spot market this week. And topping the list on the drivers is the ongoing Israel-Hamas situation, where the conflict has shown no sign of cooling down at the moment, and report of Israel considering attacking Iran's oil production facility have also raised concerns about potential disruption from the Middle East, and this is definitely going to be supporting the ascent of crude oil prices. Now, besides this is the strong US job numbers, which was released on Friday, suggesting that the US economy is more resilient than expected, and this could further support the demand outlook for crude oil in the United States. We know when there is activity, there is more jobs, people are going to work every day, coming back home, the chances for demand for oil to rise is always there. So this is another factor for me which I consider to be a positive driver for US oil spot this week. Then another factor we need to consider is the China's recent stimulus measure, which I did talk about this last week, and it has a tendency of triggering lasting economic recovery, and China being the largest importer of crude oil in the world, this is a very good sign for buyers of crude oil at this moment. If China's economy is doing very well, it is expected that their demand for oil will increase in that regard. So I think that this could contribute positively to crude oil prices as well. However, in as much as the path of least resistance for oil is looking very bullish this morning, considering all of these factors that we have talked about here, we cannot ignore the potential of profit-taking activities happen as well. Remember, since the second half of last week, we saw an increased momentum in buying opportunities in the crude oil, where there was fresh bid for this crude oil following the geopolitical tensions in the Middle East, and as a result of this, we may likely see crude oil prices face a temporary downtick as traders book some profits following last week's strong rally, the biggest one in fact that happened in this year. So we never can tell, but depending on what the structural patterns we see on the chart will give us a clue into what is likely going to be happening. And looking ahead, market participants will also be watching today's speeches from FOMC members, and of course watch the development in the geopolitical development in the Middle East for further trading opportunities around this particular commodity. Now, with that being said here, can we go right into the chart and let's look at what has been going on from an holistic perspective by scaling up into the 4 hours time frame, after which we will come back down into our execution time frame. Now, on the 4 hours time frame, things have not really changed here. That is, the structural detail we identified last week has not changed, except for the fact that the structure had been broken out last week Friday. Now, on the 4 hours time frame, if you remember vividly, this was what we were looking at in the last couple of weeks, where we did identify a descending channel after connecting the series of lower lows and lower highs since the month of June of this year. And not until last week Wednesday we saw the breakout of that resistant line, which of course gave us the privilege of joining that uptrend move. So we were able to bank on that breakout to continue that uptrend scenario. And as it is right now, price action is back at a crucial juncture, an area which was a selling niche during the later part of the month of August. As you will see here, the selling pressure, the last time price tested that resistant line was in the month of August around the $75.50 and $76 zone, and right now price action is back into that particular area. Now I will show you where I bought the US oil spot this morning. So This was where price action was prior to the beginning of this week. This was where it was around the $75 area, and of course the week started on a bearish note. In fact, we will see this much more clearer when we scale down into our execution time frame, which is the 1 hour time frame. So here on the 1 hour time frame, this was what I was able to come up with. Now, if you look at the structure closely, you will see how the week started on a bearish note, started at around the $75-ish. We saw price drop significantly into the $73.60 area. And one thing I noticed around the $73.60 level is the fact that despite the fact that the week started on a bearish note, we saw this sharp rejection of this area, giving us an hammer candle. And theoretically, an hammer candle is a candle that depicts that buyers are present around this area. Then if we go to as far back as last week Friday's trading session, you will see that this same area was serving as a buying niche. So as a result of this and identifying a structure around the $74 area, I was keen to join an uptrend move, which thank goodness it yielded positively, and of course added another buy position at the breakout of the $74.69 level, and of course the $75.50 area. And for those of you who had capitalized on this opportunity this morning based on adopting the analytical approach we usually bank on here in this community, well done and kudos to you. I can see Wokocha in the comment section said that he bought even earlier than the structure had predicted here this morning. He bought around the $73 level. Well done, Wokocha, and glad that you were part of that opportunity. However, for those of us who are yet to capitalize on this opportunity, what I will say here is that we just need to exercise some patience, and let's wait to see if the market will come back and retest structure to continue that uptrend scenario. Now, for those of us who already have a buy position triggered at this point in time, I will be suggesting that moving all stop losses to that area between the $75.20 and the $75 area is looking very promising at this point in time for all of the buy positions. Let's secure the profit here just in case price retraces back into structure. So to join the uptrend move, that is for those who have missed out, let's see if the market will come back and retest the $75.50 or the $74.69 or even the $74 area. Now, what we are going to be looking out for around this area is buy pressure or any form of reversal setup on our lower time frame. It could be the 5, 10 or 15 minutes time frame. So to give a visual representation of what I'm talking about, I want to see something like price coming back, retest the structure, continue buy pressure, showing us signs that sellers are finding it difficult to maintain momentum below any of the structures. Then that will give us an opportunity to continue the uptrend move. If it happens here, it's the same thing we are looking out for, buy pressure on our lower time frame to join that uptrend move. And if the same thing happens around here, depending on what happens, will give us a clue of how to navigate this market. So at this point in time, for those of us who capitalize on this bullish opportunity, secure your buy position. And for those who are yet to jump into this position, please just exercise patience. Don't jump in right now. We do not want to be jumping in front of a moving train right now. Let's wait for the train to get to the bus stop, then we can join the train. And the bus stop we are looking for right here is price retracing back into any of the structures we have identified. So we are looking at the $75.50, the $74.69, and of course the $74 area, where we will be looking out for buying pressure to emphasize that price wants to continue the second leg of the momentum that started today. So I hope I made myself very, very clear on this particular one. However, if you have any questions whatsoever, feel free to let me know in the comment section. And don't forget to give that video a thumbs up. Let's make the number of likes tally with the number of people on board. If you do this, we can achieve this. It allows the YouTube algorithm to push the video to a wider audience of traders who may find this content beneficial. And for those of you who are click on the like button, thank you very much. I really do appreciate your support. So with that said, let's see if there are any questions. So I will be taking the next 10-15 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list for today. Stay tuned in, guys. All right. So in the absence of no questions, I want to assume that we are all on the same page. So please remember, mark out these levels accordingly. And for those of us who are yet to capitalize on this opportunity, ensure to exercise patience and let's wait for price to come back and retest structure. Wait for confirmation, then we can join the uptrend move. So at this point in time, we maintain a bullish bias on the USOILSPOT, and we are not going to be considering selling unless price action breaches and breaks down the support line of this range bound structure around the $73.60 level. All right, so with that said, let's move on to the next asset on our watch list. So the next asset we are looking at this morning is the GBPUSD, that is the British pounds against the US dollar. And of course, last week we were able to capitalize on that strong bearish momentum that gripped the market following that very good ADP data that came in during midweek. And of course, the dovish remark from the Bank of England's governor, where he emphasized the possibility of interest rate cuts in the next policy meeting. And of course, this resulted in the US dollar taking advantage of this, and of course, building on the strong US economy, the price of the pound sterling continued to drop to the downside. Now, going into this week, we want to see if the price will continue this momentum to the downside. And in fact, after taking into account the DXY, that is the US dollar index, which obviously shows that the path of least resistance for the US dollar still remains bullish at this point in time, we will be looking out for structural pattern today that will help us navigate the structure. Now, before we go into the technical details, let's talk about the drivers that will be influencing the sentiment today or for the rest of the week. Now, From the look of things, actually this morning the British pound gained a little bit traction during the Asian session, but failed to build up on this, as the US dollar was definitely strong enough to push price further to the downside. And of course, if we look at the UK inflation showing improvement, and following the Bank of England's governor's note that the development on inflation is progressing well, and the likelihood of that this could influence the Bank of England's rate cut, and the next meeting, well, I still think that the British pound has the path of least resistance for the British pound is the downside. And why have I said this? Well, the stronger than expected US NFP, that is showing that the US economy added over 254,000 jobs in September, which was much more than market had expected. And of course, a lower unemployment rate at 4.1%. In fact, this reduces the chances of further rate cuts by the Federal Reserve, putting pressure on the GBPUSD at this point in time. And as a result of this, the limiting of the upside for the pound sterling is in fact on the table right now. And looking at the CME Fed Watch tool this morning, I saw there was a 97.4% chance that the Federal Reserve will be cutting interest rate by 25 basis point cut in the next meeting. Now, in addition to this is the cautious approach from the Bank of England at this point in time, which brings in some uncertainty into the pound sterling's market dynamic. So for me, I still think that the path of least resistance for the British pound remains bearish. But let's see how the market participants have digested this contrasted information and what their intentions are based on the behavioral structure we can see on the chart. Now, to start with, let's scale up into the 4 hours time frame. Now, on the 4 hours time frame, what I did here was to take into account the character of price action since the month of August of this year. That's about 2 to 3 months ago, 2 months ago approximately. And after doing that, this was what I was able to come up with. Now, the first thing you will notice here is a descending trend line which was breached and broken in the mid-month of September. Look at the trend line right here. So if you look at this structure closely, you will see that since the month of August, during the last week of August, this trend line was serving as a barrier for buyers, and not until the mid-week of September, price action finally broke out of that trend line. And from a theoretical standpoint, when price breaks out of a structure like this, we do expect that some point in time price may likely come back, retest the structure in an attempt to continue the uptrend move. That's a theoretical expectations, of course. Now, due to the possibility of price retesting the structure here, you would agree with me that we are at a critical juncture in this market, where depending on how price reacts to this trend line will determine if we are going to be buying or selling the GBPUSD this week. Now, in addition to that trend line, here is another structure which we cannot ignore here, and that is the fact that the area between the 1.300 and the 1.3060 area had been a strong demand zone since the beginning of the month of August. So if you look at the structure here, you can see the recent momentum here started around the month of August, and despite sellers trying to push price to the downside, we see how the same area had continued to negate all sellers' attempts to break through this particular structure. And as it is right now, price action is gradually approaching the same area that has a strong memory for buying power. Now, the question at this point in time is whether or not price will break through this structure finally after about 2 months of selling pressure around this area, or will this same level become a platform to drive price to new highs. Now, to help us navigate the structure, I've been able to identify my key level for this week, which is duly situated at that psychological level at the 1.30600 area, which interestingly shares a confluence with that descending trend line we talked about earlier. Now the question now is, we want to see if price will respect this key level and that trend line to incite more buying opportunity, or will price break through to incite more selling ideas. Now to help us navigate the structure, we will be scaling down into the lower time frame. Now our execution time frame being the 1 hour time frame, we'll begin to see things more clearly. So recently I had a sell position triggered after price action broke down the 1.31040 area. And for those of us who are joined this move, if you are taking advantage of that opportunity, please just move your stop loss to break even. I've done the same too on my own end. Now since the new week began, you can see that for about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 hours since the new week began, price was initially confined within the 1.31345 and the 1.31040 area to emphasize the prevailing uncertainty at this point in time. So after that strong bearish momentum we saw last week, the market is still contemplating whether or not to continue the trend or probably find some recovery at this point in time. And if we look at the economic calendar, we are looking forward to some very important economic event this week that could likely influence the sentiment in the market. We are looking at Wednesday, the publication of the FOMC minutes, and on Thursday we are looking at the consumer price index from the United States. That is an inflationary data. It will be giving us an insight into the inflationary level in the United States economy. And then on Friday we are looking at the producer price index, another inflationary data, and of course the consumer sentiment index, which will be giving us an insight into how pessimistic or optimistic consumers in the United States are about the US economy. So due to this high impactful event coming later in the week, we may likely see some extended sideways trading activity during the first half of this week. That is, price action will tend to trade within a range bound structure before it finally gains some traction. So because of this expectation, we need to take this into account. So whatever position we are taking, let's ensure that we move all stop losses, secure the position as price has a tendency of snapping back into our entry point. Now, in addition to this range bound structure we have here is my descending trend line, which you can see here. Price has been respecting this descending trend line ever since the beginning of this month we are in. And if we zoom back down into structure, we can see how price respected it again within this range bound structure. Now the question now is, we are heading towards that demand zone we identified on the 4 hours time frame, which of course lines up exactly with our key level at the 1.306. So now, will this 1.306 become a platform that will push price to the upside? Well, let's see how the market will play around that area. So what I'm going to be doing now is, once soon as price gets into the structure, ensure you secure more profit on the existing sell position while we wait and see how the market is going to be reacting to that level. So if the price breaks down and retests the 1.306, I will be willing to add more sell positions to my existing trade. But if probably evolves into a reversal setup, it could come in the form of a double bottom, inverse head and shoulder pattern, or a falling wedge. Then the breakout retest of the neckline of that reversal pattern could be the beginning of another wave of bullish momentum. So we are at a critical juncture here. So let's see how the market is going to be reacting to the structure. So will it break through the 1.306, or are we going to be seeing this as another buying platform? Of course, I will be giving us updates on both my TradingView and Telegram platform as soon as I identify interesting trading setups around that particular area. So this is my simple view on the GBPUSD for today. I hope I made myself clear. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions whatsoever before we move into the final asset on our watch list for today. Stay tuned in. So, in the absence of no questions, let's take this as a confirmation that we are good to go. I hope you marked out the structures accordingly. Very, very important. Let's see how the market will play out from this particular area. So, moving on to the next asset. So the final asset on our watch list for today is my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. And unfortunate for me this morning, I missed out on a 100 pip move on this particular asset. I had my timing right. I placed my alert around that area, but unfortunately the alarm sounded, but I never knew that my laptop was on mute and I didn't hear when it happened. And by the time I came back to the screen, price had moved significantly, over 100 pips in that regard. It's so unfortunate for me, but it's okay. Things like this usually happen in the market, and of course we will continue to exercise patience for new trading setup to evolve. And for those of us who did capitalize on that opportunity, in fact, well done to you for taking on that one. So let's look at the market together. Let's look at what is really going on here. I did share an update on the XAUUSD this morning on both my TradingView and Telegram platform, and of course I shared a market analysis on this asset during the weekend. I hope you watched it. If you didn't, please do so that you can have a background knowledge of how we got to this point. I would only be deliberating on the 1 hour time frame here. Now, before we go into the 1 hour time frame, let's talk about the market drivers in this market. We're going to weigh the positive and negative driver, and let's see how the market have digested this information. Now, in fact, we have two contrasting drivers in this market for this week. We have a situation where the US dollar is expected to be resilient considering the positive economic data being churned out from the United States economic docket. And of course, we also have the geopolitical tensions in the Middle East, which will continue to support demand for safe haven asset. Now, China on the other side, the optimism from a slew of economic stimulus policies in China could support broader market sentiment and indirectly benefit safe haven assets such as the gold. And if we look at the Israel-Hezbollah situation, in recent time Israel has intensified their military action, and Hezbollah too is retaliating strikes, and this has increased the war risk, maintaining a bid to tone for safe haven asset like gold. Now, another thing that could further escalate this tension is everyone is on the edge right now, waiting to see what Israel's attack retaliation is going to be against Iran, and that could further push price to the upside. However, in as much as the path of least resistance is looking very bullish for the gold, we cannot ignore the US dollar strength at this point in time. Remember, as a result of the positive NFP report last week and lower unemployment rate, the expectations of rate cut has increased significantly. In fact, it's no longer a 50 basis point cut. The sentiment now is leaning towards a 25 basis point cut, and in fact there are still a percentage of the market participants that are considering that the Fed might likely leave interest rate unchanged next month. Now, with all of this in mind and a positive US Treasury bond yield, we all know how the US Treasury bond yield is directly proportional in value to the US dollar, and as at this morning, the US Treasury bond yield is doing very well. It has continued to attract investors, and if this demand continues like this, the price will definitely rise. Now, due to all of these factors, what are the chances that both buyers and sellers have in the gold market today? Now, this morning, while I was looking at the chart, I was able to identify a simple structure. Of course, we can see the week started on a bearish note. Price started at around the 2,653 level, dropped significantly into the 2,640, which happened to be the first support line for the week. And if we take an holistic view into the trading activity in the last 11 to 12 hours, it is quite clear that the market price action has been confined within a range bound structure. And of course, when we see such structures like this, you know how we treat our range bound structures. We exercise patience and wait for price to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. But if we look at things closely, it appears that buyers are gaining the edge at this point, though it's still like break even. Remember, sellers pushed price to the downside and then buyers took it back up, so it's more like a break even situation at this point, and we may likely see an extended sideways trading activity within this range as the week goes by and as market participants await this economic data we are looking at this week. Remember, we are looking at some handful of speeches. We are looking at the publication of the FOMC minutes. We are also looking at the inflation data, that is the consumer price index and the producer price index, and of course the consumer sentiment index coming up later in the week, which obviously will have a significant impact on price action. So I still feel that the path of least resistance for the gold is to the upside, but we may likely see an extended sideways trading activity during the course of the first half of this week. And if we look at this range bound, we are looking at about 130 pips price action move. So if we can strategically position ourselves at both ends, we could be able to sniff in or scoop in some profit before this major event happens. Now, how are we going to be doing that? So I just hope that price will retrace back again into structure, and if it does, I will look out for buying pressure to continue the uptrend move. But if it doesn't, then a breakout retest of the 2,653 will be a good opportunity to buy. Now, placing a buy stop order above the 2,653 is looking reasonable at this point, while you want to be moving your stop loss to somewhere around the 2,647. That's dovetailing to between 50 to 65 pips, depending on where your entry point is. If price breaks out, retest the 2,653.50 level. So I just wish price will come back down into the 2,640 for me to join an uptrend move. And the only condition that will make me sell is for price to break down and retest the 2,640. That is, break down, retest 2,640 to sell on a long-term perspective. But on a short term, we could look out for reversal setups around the 2,653.50 and the 2,650. So if we see something like a double top structure around here, we could sell, run this 100 pips move to the downside, take profit here again, and try to run the buy position from the 2,640 back into that resistance line again. So for me at this point, I want to limit my trading activity within that range bound structure. And for those of you who are going to be part of the go challenge, you are going to see how I will be navigating the structure, scalping through this market today. So we're going to be starting that in about 30 to 40 minutes from now. So I encourage you to stay tuned in, as you don't want to miss out on that experience. Now, another thing I would like to share with you here for short-term traders, for day traders who are willing to take on short-term trading opportunities, I have also included a simple trading setup on the 15 minutes time frame. Now, if you look at the 15 minutes time frame here, the first thing I did was to connect the series of lower highs since last week Friday, and this was what I was able to come up with, a beautiful descending trend line that shares a confluence with that 2644 zone. So this 2644 zone was where I placed my alert this morning to buy the gold, which I actually missed, and I'm hoping that price will retrace back into the structure, which obviously is closer to that support line I identified on the 1 hour time frame. So if I can see something like this happen today, I will be glad and willing to join an uptrend move at the retest of that trend line. But let's see how the market is going to play out on this one. And at this area we are right now, the possibility of sellers coming in is also very visible. Remember, I did mention on the 1 hour time frame that we are at the resistance line where we saw selling pressure start the week. Now, if we see any form of reversal setup coming here, we something like let's say an head and shoulder pattern or a double top structure, we will be keen to join a bearish move back to retest the structure, which will be dovetailed into about 80, 90 and 100 pips. So let's see how the market will play out around this area, and of course I will be giving us updates on both my TradingView and Telegram platform if I see anything new happen from this particular area. So this is my simple view on the XAUUSD today. I see your comments, Cyrus Limo. How are you doing today? Good morning to you. So it's on this note I think we have come to the end of this session, but before I do close the session, let's see if there are any questions whatsoever, or if you need some clarifications, feel free to drop them in the comment section. So I will take the next 10-15 seconds off. Let's see if there are any before we start rounding off today. All right. So in the absence of no questions, I guess we are all on the same page, and it's on this note we have come to the end of today's Forex Morning Mastery. It has been a wonderful moment, and we were able to attend to 3 financial instruments which we are monitoring for this week, which includes the USOILSPOT, the GBPUSD, and of course my favorite, the XAUUSD, where we have been able to identify simple trading setups that we are going to be using to navigate this market today. And I do hope you marked out these levels accordingly. If you have done so, well done and kudos to you. All we need to do is exercise patience and allow these structures to mature. And of course, if there are any new developments on these structural details we've identified, I will definitely update us on both my TradingView and Telegram platform. And for those of you who are joining us for the first time, I do hope you are able to gain 1 or 2 things from what we have discussed here today. And if you did, well done, and looking forward to seeing more of you same time on Wednesday, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review how well these assets have been doing, and of course prepare for the second half of the week, which of course we are looking towards some volatility as a result of the high impactful economic event that will start coming in on Wednesday. So I look forward to seeing you on that day. And it's on this note, then always remember, very important, every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, let's ensure that we have a well-defined risk management strategy in place to mitigate against any sudden pullback that may happen from our intended direction. So with that said, I think we shall be rounding off right now, and I want to wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.